This is your Monex Metals Market Update with Mike Maroney.
Good afternoon. It's Monday, December 1st. My name is Mike Maroney. I'm coming to you today from the Monex studios. Let's talk precious metals. What a day today in the metals market. Let me give you the setup. Last night at approximately 5 o'clock in the evening California time, silver traded as low as $14.16. Gold traded as low as $1,141. This took place after the Swiss referendum was voted down. And for those of you who don't know anything about the Swiss referendum, there was a referendum on the table for the general population to vote on whether the Swiss National Bank would be forced to maintain a position of a minimum of 20% gold as far as their reserves were concerned. And many of the people in Switzerland thought that that might be a good idea, considering their normally conservative nature. Approximately 3 or 4 weeks ago, Deutsche Bank came out and stated that they felt that it was very possible that this referendum could pass. And needless to say, after that announcement, gold and silver were trading lower. Suddenly, both of these metals spiked higher. But last night, the referendum was defeated. 78% no, 22% yes. And the speculators that had jumped into the gold and silver market in front of the referendum sold heavily. And sure enough, silver and gold both dropped quickly. Now, you would think on that type of news that you would see continuation as far as the selling was concerned. But when silver hit 14.15 and when gold hit 11.40, the buyers started to come out of the woodwork as far as Asia was concerned. A matter of fact, silver traded from a low of 14.14 to a high today of 16.80, a $2.65 move from the low to the high. Gold traded from a low of 11.41 to a high today of 12.21, an $80 move. Now, why would that happen? Well, many people speculate that the reason that that did happen was, one, there are a lot of shorts in the marketplace, and those shorts have been looking for a way to get out and a reason to cover. And as far as the shorts were concerned, many people believed that they felt that this could be the perfect event because it may be the last piece of major bad news that we see as far as the precious metals markets are concerned. So sure enough, we had what we call a key reversal. That's when the market makes a new low and closes well above the previous day's high. We saw a key reversal in all of the metals except for palladium. We saw one in platinum. Platinum traded as low as 11.85, closed up around 12.35. We saw one in gold, 11.40. We closed at 12.18. And we saw one in silver all the way down at 14.16. And we closed all the way up around 16.65. Now, what sits out on the horizon as far as the metals are concerned? Needless to say, over the last 3 or 4 years, this sector has been beaten down. After trading as high as $19.29, gold dropped approximately $800. After trading as high as $49.60, silver has dropped approximately $35. And obviously, people are wondering, when will the bottom be in? When you think about investing, you have to look at how money flows. And money flows into and out of certain sectors based on momentum. And recently, most of the momentum has been in the stock market. Now, today, there was a little bit of bad news as far as the stock market was concerned because Black Friday sales were way lower than expected. A matter of fact, as far as last year was concerned, they were down as much as 12%. This is putting a little bit of a damper on the recent rally in the stock market as people are starting to wonder, is the consumer worried about the future? Now, when you think about what's happening in the stock market, it making new all-time highs, you would probably think that, man, that must mean that earnings are growing, companies are growing, and things are going great. But when you take a look behind the curtain, you'll find that the S&P 500, the actual PE ratio it's trading at is upwards of 18 to 1. And then what you'll also find is most of the earnings that are being earned in the S&P 500, 95%, a matter of fact, are being used for stock buybacks. Now, why would a company buy back stock if it had something better to do, like build additional factories, open up new plants, do the things that you would normally do in a growing economy? Well, the bottom line is the economy really isn't growing. The only thing that's growing is the price of stocks. And unfortunately, the general economy, based on what's happening throughout the world, is not really conducive for the stock market to continue to go higher and higher. So, are we on the brink of what could be a major correction? And could today's activity signal a potential bottom in the precious metals after a massive correction which began all the way back in 2011? Now, nobody can say for sure that the metals markets have bottomed. And one of the concerns that many people have is the fact that the Federal Reserve may raise interest rates sometime in 2015. But when you think about what's happening over in Europe, and you think about what's happening over in Japan, and you see those countries on the brink of printing more money than any other time in history, you would have to wonder why paper money in general is holding its value. Yes, the dollar has rallied from 79 all the way up to 88.45 overnight, a major move. But when you think about the long-term fundamentals that exist as far as currency in general, what we're experiencing right now is a classic race to the bottom. Everybody wants to print money fast enough so that their currency will go lower so they become more competitive. Let's look at what's happening in Japan. Japan is printing more money per annum than their total GDP, and it's crushing the value of the yen. This is making the yen situation very dramatic as far as certain other countries are concerned. Germany and Korea and some others and China, they compete with Japan. So when the yen goes down in value, their products become more expensive. So what are they to do in this type of situation? Inevitably, Germany may support the fact that the Europeans are going to have to print money. Then the Koreans are going to have to print more money. And then what about the Chinese? Are they going to have to print more money? What we're seeing is the value of paper across the board going down. And one of the only papers that's actually increased in value is the dollar. But when you think about the long-term fundamentals that exist in our marketplace, you would have to say that inevitably, sometime out in the not-so-distant future, the dollar too will come into question. That's why today's reversal may be a signal that a potential bottom is in place as far as precious metals. Most people agree that gold cost about $1,000 to $1,100 to get out of the ground. Today we were $40 away from that price. Most people agree that it costs somewhere between $12.50 to $14.50 to get silver out of the ground. Today we were a little bit below the higher end of that price. Now, does that mean that we'll continue to go higher? No, well, it only means that when money starts to move out of an overvalued sector, they're going to start to look for what asset is undervalued. When you think of the old adage, the way to make money in the market is buy low and sell high. Right now, precious metals are trading low. The long-term fundamentals couldn't look any better. And right now, without a doubt, when you think about the geopolitical uncertainty being created around the world because of these currency wars, what will happen next? I believe that the precious metals markets are poised for a major move somewhere out on the horizon. I can't tell you the date, but I can tell you this. Today, we found out that many people believe they could be very undervalued. And now may be one of the best times to explore adding precious metals to your portfolio. Here at Monex, we have some of the best prices in the world to own hard assets, the real thing, bullion and bullion coins. Give us a call today so we can show you how you could put an undervalued asset like precious metals into your portfolio. Thank you.